Welcome to Macro Hive Conversations with Bilal Hafiz. We aim to bring you the best macro analysis to help you successfully invest in financial markets. For our latest analysis, visit macrohive.com. Markets never stay still. We're seeing big repricings of central bank policy rates across the world. Our new weekly market tracker is your go-to to find out which markets you need to focus on in this respect. We're also seeing more volatility in Bitcoin. We have a write-up on our thoughts on these moves. We've summarized some new academic work by a former Bank of England official. He argues that the US has already entered a recession. And it's Halloween this weekend, so I put together 9 charts to scare you. Visit the Macro Hive site if you dare. So you can get access to all of our research as a member of Macro Hive. This includes all our research reports, webinars, transcripts of podcasts, and more, including our member Slack room, where the Macro Hive team and members discuss markets all hours of the day. It's refreshingly different from the Twitter world. When you sign up to become a member, the first month is free, and then it's only the cost of a few weekly cappuccinos. It's well worth it, and many call Macro Hive the hidden gem for investors. So once again, sign up at macrohive.com. We also have a much more in-depth product for institutional and professional investors that features all of my views, trade ideas, trading models, and much more. Hit me up on Bloomberg or email me on bilal@macrohive.com to find out more. Now, on to this episode's guest, Scott Lynn. Scott is the founder and CEO of Masterworks, a platform for investing in art markets. Scott has been an active collector of contemporary art for more than 15 years and has built an internationally recognized collection of Abstract Expressionism that has included works by Clyfford Still, Barnett Newman, Mark Rothko, Willem de Kooning, and more. In addition to Masterworks, Scott serves on the board of V2 Ventures, Payability, and the Brooklyn Rail. Now, onto our conversation. So welcome, Scott. It's great to have you on the podcast show.
Thanks for having me. Excited to be here.
Before we go into the meat of our conversation, I always like to ask my guests something about their background, their origin story, so to speak. So at what university did you study? What subject? Was it inevitable you would end up in the art and investing world or not?
I feel like nothing is inevitable, but no. So I grew up in Kansas City, middle-class family. I had a mother who liked art, but really did not grow up in an art family. I had a dad who was an engineer. So got started with computers very early, really in the mid 1990s. I don't even know if most of your listeners know what a bulletin board is, but running bulletin boards or BBSs. Yeah, kind of pre-internet days. And then, had a hobby, which was technology that ultimately became a job because the internet exploded. So I would love to say that was a path that was predictable, but it really wasn't.
No, that's great. That's great to know. And it's good to hear somebody talk about bulletin boards. So hopefully people can just Google that and find out how the world looked back then. I guess when we're talking about the art world, which is your domain, a very sort of basic question, which many people have, including myself, is how do you value a piece of art? Because it seems like it's something that's very subjective. So is there some kind of way or framework to understand the value of a piece of art?
Yeah. So when you look at the art market today, this year, roughly $50-60 billion in art will sell, half of which is at public auction. So very, very similar to how you value real estate by looking at comparable homes and kind of doing a comp analysis, you can do the same with art.
Okay, that makes sense. And are there certain fundamentals that give you a sense of where something would trade? Like say for contemporary art, there's an up-and-coming artist. How do you go about trying to value like a new person coming into the market?
It's very hard, if not impossible. I mean, if you think about the market broadly speaking, out of that $50-60 billion that will sell this year, 64% is related to the top 100 artists, many of which are no longer even living. So, that kind of highlights just the very, very low probability of an artist starting out new today and then ultimately having a successful career many years down the road. It's really hard. I always tell people that have kids who are artists or want to be artists, maybe you steer them away from that. But yeah, it's a tough market, tough industry.
Yeah, it sounds a bit like acting or something like that, or music. You just don't know if it's going to become a hit or not, or become successful.
Yeah, very similar. And we do a lot of analysis to try to understand what are the most investable segments in the market. And one of the things you learn very quickly is that paintings less than $1 million have unpredictable or less predictable returns. So when you're looking at new artists who are selling work for $10,000 or $50,000, those artists, there's no secondary market. They're not trading a public auction yet. They don't have gallery representation. There's so many hurdles that they have to overcome before the value of what they're selling becomes predictable. I liken it to, a lottery ticket. It's really challenging.
And you mentioned gallery representation, and that seems to be something that makes certain artists stand out, ones that are able to get their work put into galleries who, like Andy Warhol, I guess, is a classic where he was a great artist as well as a great marketeer as well. How important is that side of things?
I mean, it's incredibly important. So when you look at gallery representation, that's one of the biggest signals for a young emerging artist who is about to be successful. So if a major gallery like Gagosian represents an artist, the probability of their market developing and them selling for work for more future just goes way up. So it's hugely important.
And you talked about these kind of areas where you have greater visibility as art that's already selling for above $1 million. Now, how liquid are those pieces of work? Because presumably somebody buys it and then they take it out of circulation and they just keep it in their personal collection, or it gets bought by a museum or something.
Yeah, we tend to think about liquidity in terms of when someone is going to sell an object, how many people are interested in buying it at that point in time. And obviously liquidity goes down as price goes up, right? It's much harder to sell a $100 million painting than it is a $1 million painting. But there's no question that liquidity broadly is going up in the art market over the past few decades. And even anecdotally, I remember personally, like if I was trying to sell a $10 million painting from my personal collection 10 years ago, 10, 15 years ago, you would have one buyer every 6 months for that painting. Today, you probably have 2 or 3 buyers at any point in time. So I think it's better than luxury real estate, but it's definitely not highly liquid like whatever publicly traded securities.
And in terms of the buyers, is the reason why there's more buyers today, is it because of the rise of Asia and China, or is it just because people in America or the West have become wealthier?
Yeah, that's exactly right. So when you look at a lot of the growth in the art market, it is specifically Asia, specifically China, just the number of new billionaires, the increase in wealth in the top 1% on a global basis has really driven prices up and brought more collectors into the art market.
And then if we look within the art market, you have the old masters or those kind of the classic, like Da Vinci or Caravaggio or whoever, that kind of the more classical art. How do you compare that to some more contemporary artists like the Warhols or the Rothkos or something?
Yeah, well, I guess when we think about different segments of the art market, we tend to think about what segments are appreciating most quickly. So for example, artists like Da Vinci, the most expensive painting ever sold was a Da Vinci at $450 million. But Da Vinci is not necessarily a highly appreciating market. It's a highly priced market, but not a highly appreciating market. If you look at kind of different segments of the art market and you go back in time, what you find is that appreciation rate follows recency, meaning contemporary art created in the last 75 years appreciates at about 14% a year from 1995 through 2020. You roll back in time beyond that and you get to modern art, really kind of modern 19th century art, and that appreciates somewhere in the 9 to 10% range. You roll back even further to Impressionism, that appreciates at 6 to 7%. Then you go all the way back to Old Masters, and that appreciates at 1 to 2%. So what you find in the art market is that appreciation rate follows fashion, but measured in generations, right? What I want to collect is not necessarily what my grandparents wanted to collect and not necessarily what their grandparents wanted to collect.
Yeah, I see where you're coming from there. And I guess to some extent that tells you that the old masters, that's a very mature market. So you just won't be able to expect as much appreciation. I'm just thinking in terms of how you think about other markets, like the newer markets tend to go up more than the more mature markets.
Yeah, totally. And look, if I want to buy a Rembrandt today, the cost of that painting will be tens of millions of dollars. But I can almost guarantee you that when I go to sell it 15 years from now, I'll earn what I paid plus inflation. It's not really an appreciating asset. It's just an expensive painting.
I mean, the way you're looking at all of this art is from the viewpoint of an investor. So you're looking at what do you think it's going to appreciate? What's the safer investment? So when people talk about art as an asset class, how do you present the case that it is an asset class? I mean, the numbers you presented sound like it's an asset class, but how do you convince people that it's an asset class and on top of that, it should be part of your portfolio just like public securities are?
Yeah, it's actually, so it's kind of a fun story. So when we started Masterworks 4.5 years ago, one of the very first conversations we had was with the head of research at Goldman, who asked us a very simple question, which was, prove to me that this is a strategic asset class, meaning 1, it beats inflation, and 2, it's non-correlated. And, that was an interesting question because everyone sort of broadly accepts the fact that art is appreciating, but I think there really haven't been good research teams that have been founded on studying the very simple principles of the art market. So we decided to put together a research team, and really today have built the leading research team in the art market to understand basic characteristics on the asset class, like return, like correlation, like loss rates, and so on. And what you find when you look at contemporary art, and again, that's art created after World War II, that segment of the market appreciates roughly 14% a year. The correlation factor between art and the S&P is negligible, something between negative 0.1 and 0.1. The highest correlation, interestingly, is between art and gold, roughly 0.2. But I think very broadly speaking, it's a non-correlated asset class that tends to outperform other asset classes. The challenge with it historically has been the only way to allocate is if you have millions of dollars to buy a painting, or if you have tens of millions of dollars to build a portfolio. So it really hasn't been investable, even though the characteristics of the asset class are very interesting.
And presumably there are periods of underperformance. I mean, which years were years of underperformance? Why did it underperform in those years?
Yeah, I mean, we never know exactly why it underperforms, right? We can guess. So the most recent underperformance with the art market was 2016. The best guess as to why it underperformed the S&P broadly is because of either Brexit or capital controls in China. I think capital controls in China are most interesting, really preventing Chinese from moving money out of China. And China today is roughly 25% of the art market. The US is 25%. Western Europe is 25%. And then kind of rest of the world is 25%. So China's become a really big player in the art market overall. I guess a big player in everything.
Yeah, that's true. Yeah, I live in London and you can see the impact of the Chinese money on property and luxury spending. So I kind of hear you there. It just came to mind now. I mean, is there some relationship between jewelry and art as well or not?
I don't know. We often get asked a lot of questions around collectibles broadly. How does art compare to jewelry? How does art compare to classic cars? How does art compare to watches? I think that the challenge that we have with all of those questions is that when you look at those individual markets, they're relatively small. So there's no way to do index construction on them. There's really no way to understand if they're appreciating or not. So the answer is we don't know. I mean, you could high level assume that maybe gemstone prices are driven by growth in the top 1%. I don't know. Yeah.
Yeah, but it's hard to say. I mean, you need to kind of measure this. I mean, you mentioned an index, and you've also said you built a research team as well. So just tell me a bit more about how you constructed an index of art, how far back it goes, how difficult it was to come up with the index, because I imagine it must have been quite difficult.
Yeah, so there's different approaches to index construction. We actually follow a methodology that's identical to what Case-Shiller uses for home prices. So we look at individual paintings that have been bought and sold at public auction. So individual returns of an object when someone bought it and then when they sold it. And then we basically look at those returns across thousands and thousands of paintings to understand how the market overall is performing. And we've looked at that methodology versus others like hedonic regressions that have been done by other people in the art market. And we think it's the most statistically significant and the most reflective of art prices overall.
And how far back does the index go now?
We're always adding additional data points back in the future. I think now it goes back, I want to say, into the late 1960s.
Oh, okay. So quite far back.
Quite far back, yeah.
Now, you talked earlier about access to the market. So as an outsider, I would say you have to be super rich and holiday in Monaco and all these sorts of things to be able to buy one of these pieces of art. But of course, there are platforms now. Masterworks is one of the leading ones. I mean, how can something like Masterworks work? I mean, how can you get ownership of high value pieces of art, but not fully owning them?
Yeah, so we use a process that's very similar to how a company goes public in the US to securitize a painting. So we buy an individual work of art, we file it as a public offering with the SEC. So you can go to the SEC's website on Edgar and actually search for Masterworks and see all of these offerings that we're filing. And then you can effectively read what's like an S1 on a painting going public, but sort of reads like a company going public. So as soon as that offering is qualified by the SEC, we sell shares to all types of investors, including retail investors. We now have a trading platform where after the offering closes, investors trade shares in the secondary market. And then eventually we sell the painting and distribute proceeds.
Okay, so that sounds fairly straightforward. So is there a risk that you could end up, Masterworks as an entity ends up holding a piece of art if you aren't able to sell it? So you're kind of carrying the underwriting risk.
Yep, there definitely is, and that's the nature of our business. We would love to take consignments, but the way the art market works is if you're an ultra wealthy person who owns a $10 million Picasso, you just want to sell the painting and be done with it. You don't really want to talk to an online platform like us about having it consigned. So we really have to buy paintings with balance sheet capital, and then we turn around and make them offerings for investors.
And are there some examples of like recent pieces of art that you'll want to kind of highlight that have been notable in the auction world that have sold?
We, unfortunately, from a regulatory perspective, I can't talk about offerings, but I can talk about artists that we offer on the platform. So the most recent artists have been artists like Basquiat. We do a lot with kind of important sort of emerging artists. So people like Sam Gilliam, we've recently launched, his market has been incredible. It's been appreciating 30 or 40% a year for the past several years. Artists like Agnes Martin, who's a great minimalist, well-known names like Andy Warhol, Monet. We really kind of look at most of the major artists who are trending today or, generationally popular.
And out of interest, again, trying to delve into like what makes someone successful. Of course, it's hard to know. But why do you think someone like a Basquiat was or is successful? What was it about him?
It's such a great question. So his market, we think, is one of the most interesting from a risk-adjusted basis, right? So when we look at his appreciation rate over the past 15, 20 years, it's been somewhere between 18 and 22% a year, broadly speaking.
I mean, that's pretty high. That's quite impressive.
It's very high. And his prices continue to go up. I mean, the number of Basquiats that we look at today that are 30, 40, $50 million paintings, it's pretty amazing. Why is he continuing to go up? I mean, obviously he was painting with Andy Warhol. He's famous during his lifetime. There's this famous image of him on New York Times Magazine when he was alive. He's very culturally significant. But I think for whatever reason, people continue to find it fashionable and they continue to want to own it.
And buyers of his art, they include international buyers. It's not just US buyers. So it's not just a US phenomenon, someone like a Basquiat.
He's definitely collected internationally. There's global demand. The US is his biggest market. But yeah, there is global demand. That's one of the interesting things about the art market too, is even though there's different countries sort of buying paintings and there is concentration by country, you can buy a painting in New York, you can put it on a plane and you can sell it in Hong Kong. Our acquisitions team is doing deals all around the globe on any given week. And when we're thinking of selling paintings, we're thinking of selling them globally. So it is an interesting market like that. And
then you also mentioned Sam Gilliam, and you said it's had really interesting price characteristics of late. Can you talk a bit more about what's been happening there?
I think the art market has gone through this process over the past 5 years where a lot of artists that, referred to as identity artists, Sam's, an African-American painter who's super culturally significant, has been collected by institutions or museums for decades, but his prices from an art market perspective really haven't caught up. So, I think his paintings were selling 10 years ago for literally $20,000 or $30,000. Today, they're selling for $1 million, $1.5 million. And it just, his momentum continues to build from an institutional perspective as well as a collector perspective.
And I also like your website, the masterworks.io website, because you have a price database in there where you can type in an artist and then it will give you a selection of their art, how much it was bought for and how much it was sold for. So, and you have quite a large database, so you can just plug in anyone and it gives you a good sense of that artist.
Yeah, so that database took us, it's kind of crazy. It took us 2 years to construct. We went back and we bought paper auction catalogs going back decades, had a team of 30 interns, literally find every single time that painting was bought and then subsequently sold in those catalogs, matched them up, recorded, and we publish all that data for free, no charge, just for people to understand the art market.
Yeah, no, I think it's a great resource, and I've been sort of delving into it every now and then to kind of see if I don't actually have any of those artists, but one day perhaps. Now, in terms of getting access or getting exposure to this art, so we said earlier that you want to get exposure to valuable pieces of art, not the very small sort of tickets, but with a platform like Masterworks, so what's the minimum ticket size? Like as an individual, if I wanted to put some money down, like what's the lowest I can put down to get exposure?
Yeah, so we're required in the US to run everyone through suitability. So when you set up a call with our membership team, they'll basically talk to you about how you're investing today, what your risk tolerances are, how much you want to allocate, how much you want to diversify, and then basically set minimum investments based on that. So we try to have minimums above $10,000, but to be honest, we lower those based on suitability and portfolio size if that's too high.
Okay, so it's not something like in the hundreds of thousands, so it's more accessible than even that.
Yeah. And we literally have investors investing $500 in paintings. I think our average investor today is probably investing around $10,000, but yeah, that's how to think about it.
And when they invest, are they investing in one piece of art or are they investing in a portfolio of artwork?
So today it's one piece of art. So it's picking and choosing individual artworks to invest in. But we tell investors, art is no different than any other asset class, and diversification broadly is important. So when you're investing in Masterworks, the idea is to invest in multiple paintings over time. And it's the one thing that's interesting about what we're doing, which is maybe non-obvious, is that if you think about a collector in today's world of going out and buying paintings and building a portfolio, one of the really hard things to do as a collector is portfolio construction. Because if I want to build a collection of important, mid-century abstract expressionism, the challenge is that a Rothko costs $35 million. So my portfolio all of a sudden has to be, hundreds of millions of dollars. So you can go into Masterworks and you can literally just invest, $5,000 per painting for 20 paintings and have this nice, equally balanced portfolio of $100,000. It's really never been available before from an asset class perspective.
Okay, yeah. And have you thought about producing some kind of basket where I can just buy the basket and have exposure to like 100 different piece of art or artists? Is that possible or not? Is there some logistical or practical issue that stops that from happening?
Yeah, we're working on that now. We expect to have something, released in the coming months. We can effectively invest in a fund that buys security in the underlying paintings. Our world is complicated from a regulatory perspective. So every product we do is seemingly easy, but takes many months, if not years, to release. But yeah, that's definitely on the roadmap.
And another question that just came to mind is what happens to that piece of art? So obviously you securitize it and people have fractional ownership in that piece of art, but the actual piece of art, where does it sit? And is it possible to view it?
Yeah, so all the paintings today sit in a Delaware free port, so we don't pay sales or use tax on the purchase. We're really in an attempt to increase returns. Now we do loan those out to institutions or museums for relevant exhibitions. So we have some painting on loan right now for that purpose, but generally they sit in storage unless we put them on view at museums.
And, I have to ask this. There's been this huge growth in digital assets and NFTs of late, so Beeple and this, that, and the other. What's your take on that? Because you're obviously somebody immersed in the art world, and now there's all of these, the crypto crowd is coming and all of this digital art. I mean, how do you view that?
Yeah, it's controversial. Everyone at Masterworks tells me to stop saying this, but I'm kind of the outspoken anti-NFT person. And again, told the story about how when we started Masterworks, one of the things we had to do very early on is prove that this is a strategic asset class and it deserves a role in an investment portfolio. I think the challenge with NFTs is that, we don't know what the appreciation rate is. They're obviously highly correlated to Ethereum, which is highly correlated to Bitcoin, which is highly correlated to public equities. It feels like speculating to me. It doesn't feel like NFTs, at least in the next decade, will have enough data to demonstrate that they deserve a role in an investment portfolio.
I mean, I'm not too familiar with this area of the art market, but was there already a digital art part of the market, like video installations or like digital art? Was there something happening in there already before the NFT world?
I mean, it depends how you define digital art, right? There's obviously a lot of artists that have worked with light, a lot of artists that have worked in other mediums. I wouldn't say that digital art in the way that people think about it from an NFT perspective has really been done before. But again, I'm still confused about what is an NFT exactly, right? Like an NFT really is just a digital image. I don't know. Is it a new medium? Is it just distributing a digital image differently? I don't know.
Yeah, I hear you there. Now, so outside of that, just in terms of your personal tastes, do you have a particular period or artist that you like? US artist, European artist, Basquiat, Warhol? What's your personal taste?
Yeah, so, I've been collecting abstract expressionism for years. So that's artists like Pollock, Rothko, Clyfford, de Kooning, kind of the original masters of American art. I'm also collecting now more living artists for fun that I know or that I just like their work. My personal collection really isn't from an investment perspective. It's not, unfortunately, the highest appreciating artist or the artist that we see the best data on. But, I've been doing it for 20 years and just like it at this point. And
just out of interest, I mean, why did you get into art rather than, say, music or the other side of the artistic world, or even just other types of investment? What was it about art specifically? Yeah,
it's a great question. I don't really know the answer to that. I mean, I got involved collecting really in the late 1990s, and the art world was totally different then than it is today. mainly because, the internet didn't exist. And therefore, price databases like artnet.com or artprice.com, where you can access public auction records on art data, didn't exist. So the collecting dynamic, I think, was not as investment focused as it is today, because people didn't have access to data to really analyze. But I don't know, I stumbled upon it really young and just became totally immersed in it from a collecting perspective. And obviously, as a young collector, made a lot of mistakes and overpaid for stuff, worked with the wrong people, bought the wrong artists, ultimately over years kind of learned. But I think it's such a fascinating industry, right? It's just fun to get involved with. And from an investment perspective, I think it's probably the largest asset class that's never been securitized. It's never had investment products built for it.
Okay, now just a few personal questions. I do like to kind of go a bit deeper. One is, and I ask this to all my guests, what's the best investment advice you've ever received from someone? Yeah,
it's a great question. So I like to analyze that question from the opposite side, which is where have I lost all of my money? What has caused me to lose money? And, there's two things generally that I think about. One is, how much do I really know about what I'm investing in? Generally, I've lost most money in sort of esoteric investments around energy or things that I just don't really understand. And then the second is, how much control can I exercise over the investment? And I've learned throughout my life that control is almost more important than price. So when I think about things like angel investing, or when I think about startups that I have that I'm kind of majority shareholder in with CEOs running them, I just tend to think about control. And control is one of those things where you can certainly structure control, but it's also just relationships at the end of the day, right? Like if something goes south, okay, will someone answer a phone? Do I have influence? How do you think about that? Then the other thing that I would say, which I see a lot at Masterworks, and I see a lot with retail investors in general, is I think investors are hyper-focused. 90% of attention is on headline return, and 10% of attention is on risk. And the difference between a novice investor and a very, sophisticated, smart investor is really understanding risk-adjusted returns. And the example I'll give is really in angel investing, or even venture to a certain extent. I've been starting technology companies for 20 years. I've raised capital from lots of different people. I have lots of different friends in venture, private equity. And I think when you look at venture as an asset class, it's an incredibly difficult asset class. Most of these venture funds survive on one or two investments. The success isn't really predictable into the future. And yet people love that asset class. And they love it because of the huge headline returns that can be achieved if you're the early investor in Uber. But when you look at the performance of venture and private equity overall, it sort of outperforms public equities by 300, 400, 500 basis points. You take out the couple hundred basis points in fees, and then you think about the risk, it doesn't seem that interesting to me. So I think that investors are good at understanding headline returns, but often unaware or just ignore risk.
I agree with that. It's true. And successful investors I've spoken to tend to focus a lot on the risk side. They're always worried about their risk of ruin, the risk of failure. So they always focus on the downside a lot. And I think especially in the angel and venture space, we always just hear about the success stories, but there's probably like 20 other investments that go to zero.
Right. Yeah. And obviously the best investments are those where you can sort of limit downside and have unlimited or very high upside. But yeah, so that's how I would think about, advice to investors.
And the other question I had was more in terms of personal productivity, whether you have any productivity hacks, because presumably you're overwhelmed with information like everybody else. People are always presenting you with new investments, or you've got a million things to do at work. How do you manage your time? How do you make sure you're not overwhelmed? Do you have a system or not?
Yeah, I think time management is critical. And I often, it's funny, like people I work with who are bad at time management, they're usually just less productive. I think most people that you would ask about me would say I'm one of those people who's highly productive in that, every minute of every day is organized and booked out. In terms of personal technology stack, I think it's really evolved into what it is for most people, which is like Google Docs, Slack, some sort of task management type system. At Masterworks, we use a product called ClickUp, where we have all the teams sort of manage daily tasks, obviously for development and stuff like that. We use other tools, but yeah, it's not, it's funny. Like when I think about productivity tools like Slack, for years at technology companies I had, we would use this product called IRC, which is like an early internet chat server, which eventually today everyone knows is Slack. But that was such an obvious productivity hack that most people didn't use up until the past couple of years. Like I think tools for productivity are becoming typical, right? Like everyone's kind of starting to use the same stuff. Generally, I think it becomes more about just time management and adopting the use of technology, broadly speaking, to stay productive.
We use Slack at MacroHive, and one of the challenges I find with Slack is that there's a lot of messages that kind of spring up all over the place. It can distract you quite easily as well. You go down a rabbit hole of seeing, okay, what does somebody say in that channel and somebody saying that the other channel. So I think Slack is great at one level, but then you still need that discipline of not reacting to every new post, so to speak.
Yeah, I think that's right. I mean, look, at the end of the day, productivity really is driven by personal prioritization. So, one thing that I've never understood, this will offend a lot of friends, but one thing that I've never understood is people that let their assistants manage their calendar. So that to me just flies in the face of a highly productive behavior, because at the end of the day, you're letting someone else who doesn't exactly understand your priorities prioritize your life.
I'm totally on the same page. I don't let anyone ever control my calendar.
Yeah, my calendar is sacred, right? Like the last thing I want is someone else planning out my day who doesn't understand my priorities. That sounds awful. That sounds like I'm at school again. But so many people do that. I've never understood that.
Now, final question. What books have influenced you, or are there any books you've recently read that you'd recommend?
I mean, there's a lot that I'll talk you through two. So one is the recent one is Thinking Fast and Slow, which I read last year, which a lot of people are probably familiar with. But if you care about decision making, that book to me is one of the most influential books on how to think through making effective decisions based on how your brain actually processes data and reacts to different things around you. Like that's really helped me improve how I react and how I respond in the decision-making process. The second book is sort of an evolution, but has been thematic throughout my life, which is Competitive Strategy by Michael Porter. And I started my career really focused on execution. How do I get teams and how do I get businesses to work hard, move fast, be highly productive? And I think 10 years ago, I realized, it doesn't really matter if you're executing well if you're executing towards the wrong thing. And there's a whole bunch of examples in that in tech where I think a lot of the most valuable tech companies today are not necessarily great at execution, but they've been phenomenal at strategy. So the fundamental kind of 5 forces framework that Michael Porter has that helps you essentially take a business or a product and figure out how to differentiate it so that it operates in a segment of a market with less competition, therefore can capture higher margin and higher growth is like a really important framework that I think about, all the time, probably literally on a daily basis when I think about businesses or starting businesses or how to scale businesses.
Yeah, that's a really, really good book. And it just reminds me I should reread it probably because I feel like I haven't taken the lessons. Yeah.
Yeah, it's a good one to reread. And there's competitive advantage too, which came after Competitive Strategy. But yeah, it's worth rereading every couple of years.
Now, if people wanted to learn more about Masterwork and follow you as well, what's the best way for them to do that?
Simple. Just go to Masterworks, www.masterworks.io, request a call with our membership team, and they'll literally talk to you about how you're investing today, what your investing goals are, how art can be part of an asset allocation model and can be used to increase sort of risk-adjusted returns in a portfolio.
Okay, that sounds great. Well, that was excellent. I really enjoyed the conversation, and thanks again for taking the time to speak to me.
Likewise. Thanks for having me.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating and a nice comment, and let other people know about the show too. We'd be super grateful. Sign up to become a member of MacroHive at macrohive.com. We'll be back soon, so tune in then.